This timer counts down to Bitcoin's next breakout. Hey guys, what's going on? Jeb here, and in today's video, we're going to be talking about the effective federal funds rate hike that will be coming out 3 hours exactly after this video uploads. This video is going up at 11 a.m. Eastern on the 3rd of May, 2 p.m. Eastern Daylight Time, May the 3rd, 2023. The Federal Open Market Committee will be releasing their decision on the funds rate. The effective federal funds rate is the interest rate that underpins the entire United States economy when it comes to debt and overnight banking transfers. With what is, at this point, almost guaranteed to be a 0.25%, 25 basis point rate hike, we're likely going to see a huge impact on the stock market and on Bitcoin. In this inaugural Wednesday episode of Climate of Crypto, we are going to be talking about how the effective federal funds rate hike that is coming in 3 hours will have a major impact on the price of Bitcoin. So without much further ado, guys, let's go ahead and dive right on into it. This clock counts down to the Federal Open Market Committee's meeting, and specifically, it counts down to the moment that this article is released, the Federal Reserve press release. That timer, at the time of recording this video, has about 26 hours left on it. When you see this video, it will have exactly 3 hours left on it the moment that this video goes live. Once that timer reaches 0 seconds, then you see something called the Federal Reserve press release be released. You can find that press release and all the former press releases for FOMC meetings going back to 2018 by going to the link at the top of the Citations section in the description. That will take you to this webpage. This is the Federal Open Market Committee meetings, calendars, statements, and minutes webpage. Scrolling down at the very moment, we can see that there are statements for January and February, and then also March, and then as soon as this video is uploaded a few hours later, you will see a statement appear right here. That statement will look something like this. It's called the Federal Reserve press release. In this statement, if you scroll down to the bottom, then you will see somewhere right around here, there is a line that says this: the Board of Governors of the Federal Reserve System voted unanimously to raise the interest rate paid on reserve balances to 5.15% effective May 3rd, 2023. That line is very significant because while I'm predicting that that's what it's going to say here in 3 hours, we don't actually know that. You see, in this video, we're going to be exploring two different options. Number one, we're going to be exploring the option that they don't hike rates, which is very unlikely at this point in time, but we're also going to be exploring the option and the one that is most likely that they do hike rates, and we'll be discussing how both of those things impact the Bitcoin market. But before we discuss both of those options, let's first go back in history and see how effective federal funds rate increases have impacted the Bitcoin market over the last 3 to 6 months. On this chart, I've outlined the last 3 effective federal funds rate increases. One of those meetings took place on the 14th of December, 2022, and we saw a 0.5% EFFR rate hike to 4.4%. You can find that data by going back to this website, scrolling all the way down to December of 2022, hitting this button where it says Statement PDF, and then scrolling down in the press release all the way to the part where it says that interest rates paid on reserve balances have been moved to 4.4% effective December 15th. That's how you can find all of the rate hikes that we'll be discussing in this video and in future videos. After we saw that 0.5% EFFR rate hike from 3.9% to 4.4%, Bitcoin's rally and uptrend, which it had been in for over 22 days, over 3 weeks, and saw Bitcoin rally 18%, $3,000 ended, and within just a few days, we saw Bitcoin drop by 11% or over $2,000 after this announcement was made. Moving along here, we can see that the next effective federal funds rate hike was a 0.25% basis point rate hike on February the 1st, where we saw the base rate move from 4.4% to 4.65%. In the 33 days preceding that rate hike, we had seen Bitcoin rally $7,500, 46%, and we saw that end the very day that the effective federal funds rate was increased by 25 basis points. Over the course of the next 12 days, Bitcoin would drop $2,500, or about 10%. Moving on to the final effective federal funds rate hike, before we get to the one that we're about to see today, we can see that the effective federal funds rate was again hiked by 1/4%, otherwise known as 25 basis points, to 4.9% on the 22nd of March, 2023. Before that rate hike came into play, Bitcoin rallied $9,300, 47% over the course of 12 days, in one of the most explosive rallies that Bitcoin had witnessed in a very long time. The moment that that rate hike came out, Bitcoin's uptrend completely stalled, and Bitcoin would not break above the same level again for nearly 3 weeks. That leads us to where we are today with a rate hike coming tomorrow that the same CME FedWatch tool that has the countdown we discussed earlier predicts with a 94% likelihood that we will see a 25 basis point rate hike today on May the 3rd. We're going to explore both options, whether or not there is no rate increase or there is a rate increase, but I want to say a couple of things first and foremost. To begin with, I want you to realize that whenever Bitcoin was in a minor uptrend, the effective federal funds rate coming out completely reversed that uptrend and moved it into a downtrend. The same thing would occur here in January and February. Bitcoin had been in a very large uptrend, but right before the effective federal funds rate increase, Bitcoin's uptrend was slowing down. When we saw the effective federal funds rate increase come into play, we then saw that uptrend move straight into a downtrend. In the one case where Bitcoin was already in a massive uptrend, the effective federal funds rate still stopped the uptrend in its tracks. Even though it didn't move us into a downtrend, it did completely halt that bull rally. The first point is that an effective federal funds rate increase necessitates that whatever bullishness the market was undergoing before ceases. And that's not just on Bitcoin. You can see the same thing plotted over here on the SPY. Plotting the same meeting schedule over the SPY, the index that tracks the majority of United States stocks. Following the December effective federal funds rate hike, we saw a 6% drop in stocks in a week. When the February 1st decision came out, the very next day, we began a downtrend that would lead to nearly 9% in correction, wiping out trillions of dollars of stock market value. The third and final rate hike that we saw on March 22nd saw the SPY drop by over 2.5%. Now moving into May 3rd, which is today, we're seeing that there's likely going to be another drop on SPY as a result of the effective federal funds rate increase, but also as a result of the stock market hitting its head on critical resistance, as you can see right here at $417. The implications for that are obviously, first and foremost, the stock market is correcting a lot whenever the effective federal funds rate hikes, and two, if you see the stock market move into a downtrend, keep in mind that Bitcoin is highly correlated with the stock market. So not only is the effective federal funds rate leading to a drop in Bitcoin, it's also leading to a drop in the stock market, which normally leads to a drop in Bitcoin. The next thing I want to do is provide you with a timestamp, which I'll put right here, because if we have a 25 basis point rate hike, like we probably will, everything I'm about to say will not be relevant. So what does it look like if we have a 0% effective federal funds rate hike? Again, I think this is highly unlikely, but it is something that we should talk about briefly. First and foremost, from a macroeconomic standpoint, this would actually be a huge turning point in the Fed's policy. The Federal Reserve right now is fighting tooth and nail to get pandemic-driven inflation under control so that they can bring back strength to the United States dollar and use it as an economic weapon against Russia in the Russian-Ukrainian war, and for the sake of just maintaining the United States' dollar hegemony. If they were to pause and plateau the effective federal funds rate hikes right now, that would mean that we have plateaued at 5%, which means that we would likely start to see drops within a year to 18 months. That would have huge knock-on effects on every market, not just cryptocurrency, but also on the stock market, on the housing market, and more. Even if they don't pause rate hikes right now, they probably will at some point within the next year. And when that plateau comes, that will likely lead to a major shift in the sentiment about what the future holds for the global economy, and especially for the United States dollar. As far as for what it would hold for Bitcoin, it would probably be a bullish thing for Bitcoin in the short term, allowing Bitcoin to go through a major rally up to $30,000 in preparation for the May 10th CPI data release. Now, as for the most likely scenario, and that is another 25 basis point rate hike, how will that impact Bitcoin? Well, let's go ahead and jump into the theory of that. But I do first want to preface with the fact that Bitcoin has been acting quite sporadic over the last couple of weeks as a result of the fact that it did not have a correction in the beginning of April, and it did not rally to 32,935 as we were hoping and expecting based on our models in mid-April following the CPI data release on April the 14th. As a result of the missing correction in the beginning of April and therefore the smaller subsequent rally in mid-April following CPI data release, Bitcoin has jolted the system and we're still having to rebuild some of our models. That being said, here's what I believe would happen when we do see that 25 basis point rate hike. First and foremost, this will be taken by the market as a more of the same movement. You're going to see the mortgage rates continue to go up. You're going to see credit card rates continue to go up. You're going to see the rates for CDs continue to go up. You're going to see auto loan rates continue to go up. You're going to continue to see a constraining on the United States economy, especially on businesses that rely on debt. I'm mostly looking at Silicon Valley right now. Many of those different tech startups that rely heavily on debt that they have to pay back in a certain time frame with a certain amount of interest, all of a sudden are going to have to pay even more to get that debt because the interest rates will be higher. This also will have a major impact on the stock market because it will likely lead to a drop in the stocks in the short term, but it'll also lead to this constraining in the stock market. You can think about the liquidity crunch that's going on as a result of the increasing rate hikes as a shrinking pond. that still has the same number of fish. There's just not as much room to run around anymore, swim around anymore. This will also have a major impact on the United States housing market. It is becoming increasingly more expensive to be a homeowner in the United States, because what you could afford a month buying a $400,000 home a year ago before rates started getting hiked, you can now only afford a $250,000 home. That moves all of the buying pressure in the housing market from that middle range of about $300,000 to $500,000 in most parts of the country down to the $200,000 to $300,000 range in the most parts of the country. The problem with that is that causes demand in the $300,000 to $500,000 range to dry up, because most Americans can't afford it because of the high interest rates on home loans. That drives all of the demand down to the $200,000 to $300,000 range, which, because of supply and demand economics, causes the value of those homes to go up, which then forces the vast majority of Americans out of the homeowner game, and they have to go back into renting. Because they can't afford to buy a home and they have to rent, then they have to rely on massive investors that have tons of rental properties or own apartments that are then having to raise their rent because they're having to pay more on interest. This causes cost of living to go up across the board, and it makes it a lot harder for people to invest in investments like Bitcoin and the stock market. But how will this impact Bitcoin's chart? It is very difficult to tell exactly how this effective federal funds rate increase will impact Bitcoin, but I do believe that it will lead to a massive breakout on Bitcoin in one of two directions, either up or down, based on a couple of factors. There's a website I want to direct your attention to called coinglass.com. This references the total amount of liquidations that are taking place in the cryptocurrency space of longs and shorts. In short, no pun intended, if you are in a leverage trade, then you can get liquidated because you are borrowing money from an exchange, and they're not going to let themselves lose the money, so they're going to kick that back on you. A lot of people are in longs and shorts right now because of the massive amount of volatility in the space. Bitcoin is moving up one day, down the next day, and there's not a lot of way to predict exactly what it's going to do. So even in just the next 24 hours between when this video is shot and when this video is uploaded, Bitcoin could be above 28,545, below 28,545, in danger of a long squeeze, in danger of a short squeeze. So I'm going to set you up to understand both of those just by checking your own chart. If Bitcoin is above 28,545 when the Federal Open Market Committee releases their decision at 2 p.m. Eastern today, then that will likely lead to a small amount of bearishness on the market that could drop Bitcoin even less than $1,000, but that could very well cause what's called a long squeeze. Because of this bullishness that took place literally the hour that I'm recording this, the 10 to 11 o'clock hour yesterday, for you, which is today for me, which is the May 2nd date, a lot of people may be moving into a long position when you see this video because they're expecting that the market is going to basically have already priced in the bearishness coming from that FOMC meeting's decision. In short, when you see this video tomorrow, it's very possible that quite a number of people are going to be in longs because they're anticipating that a week from now, when the CPI data releases and we see a CPI drop, Bitcoin will go into a major rally. Those people could get long squeezed, and we could see a long squeeze that drops Bitcoin down several $1,000s. I would estimate that many of those longs have liquidation prices below $27,000 because that is the base, that is the floor that Bitcoin's been operating off of so far. That floor comes from the fact that Bitcoin is currently riding the 50 daily simple moving average. I would imagine that many people that are using leverage right now, if they are in longs, have their liquidation price below that level. So if Bitcoin does drop today, May the 3rd, below $27,500 to below $27,000, many of those people that are long, as a result of the fact that Bitcoin has looked so bullish, not going through corrections to 25,236, could get liquidated, and we could drop the Bitcoin price down to 25,236 within just hours. Absent a long liquidation, we're probably going to see a smaller correction drop Bitcoin around $1,000 to $1,500 when the effective federal funds rate hikes 25 basis points again. But we are in uncharted territory here because this will be the third 25 basis point rate hike that the market has seen. It is very possible that the market says, we're used to this. We've already seen two of these. Not a big deal. We're going to ignore it and wait for the CPI data release a week from now. I would personally like to see Bitcoin go through some kind of correction, be it a long squeeze or otherwise, to drop Bitcoin down to 25,236, down maybe to the 100 daily simple moving average, which will tomorrow be sitting just below $26,000. Because from that point, we will be in prime position that when CPI data releases at 8:30 a.m. on May the 10th, 2023, Bitcoin will have had a large enough correction to warrant a large enough rally to push us all the way back up to our price target at $32,935, effectively confirming a bull market. There's a lot going on right now. I understand it might be confusing, but one of the things that helps me to understand where Bitcoin is and where Bitcoin is going is technical analysis. I've just shown you a lot of technical analysis in this video, coupled with a fundamental understanding of the way that the effective federal funds rate impacts Bitcoin, the way the CPI data release impacts Bitcoin, and the way that the broader financial and geopolitical zeitgeist impacts cryptocurrency. It is absolutely vital that when we are studying cryptocurrency markets, that we have first studied and learned how technical analysis works, and we understand the market upon which we are analyzing. Based on my understanding of cryptocurrency right now, and based on my understanding of all of the impactors in cryptocurrency, I think that we do have a strong likelihood of seeing a major correction come in of a couple $1,000s today, May the 3rd, here in 3 hours when that news releases. And from there, we will be in a position to go into a massive uptrend once CPI data drops on May the 10th, exactly a week from today. That'd be next Wednesday. But to come to that conclusion, I have to be able to look at the market through the lens of technical analysis. It's my dream to have financial sovereignty for my family, but it's also my dream to show you how to achieve what I call financial sovereignty. If you're not aware, financial sovereignty is simply the idea of having total and complete control over your finances, and your finances being in service to you, not the other way around. The Lord says you cannot serve both God and money, and you cannot live your life in a sovereign way with this kind of idea of dominion, kingship, authority over your life, control over your life, if you are in service to your money. You can be a slave to your money even if you make $1 million a year, because you're spending $1,200,000 a year on frivolous expenses. You could be making $60,000 a year and be financially sovereign because you keep your expenses so low to the ground that you're still able to profit every single month and you don't have to stress about it. Whatever it is that's your dream, I want to help you achieve by gaining what we call financial sovereignty. I want you to have complete and total stewardship and control over your finances, that you would not serve them, but they will serve you. And I firmly believe that an education is the best way to do that. That's why the skill that helped me achieve financial sovereignty, technical analysis, is something that I want to teach you. And that's why we created Club DeFi's Principles of Technical Analysis. In Club DeFi's Principles of Technical Analysis, I'm going to teach you absolutely everything you need to know to get started technically analyzing these markets so that you can get a jump start in learning how to read them, profit in them, trade in them, invest in them, and build a career and a living in them. We've got over 60 videos over here in Club DeFi teaching you all of the tenets of technical analysis so that you can get started today. And with a lifetime membership to Club DeFi's Principles of Technical Analysis, you'll also be getting access to our exclusive Discord server, where we have office hours every single Monday at 8:30 p.m. Eastern Daylight Time, where I myself show up, meet with you guys, and answer your questions directly. Club DeFi's Principles of Technical Analysis is not just a place with a bunch of video lectures to teach you about how to chart. It is the one-stop shop to ground yourself in some kind of trade, some kind of skill, in this case technical analysis, that will help you to achieve the financial sovereignty that you're looking for in the cryptocurrency space. Principles of Technical Analysis is just the first of many courses that I would like to build out in Club DeFi so that I can help you guys to build that financial sovereignty that you guys are searching for here in crypto. So if you're interested in learning how to do technical analysis, and if you're interested in learning more about this concept of financial sovereignty, not being controlled by your money, but having your money serve you, then subscribe to the channel and sign up for Club DeFi's Principles of Technical Analysis today with the link in the description box down below, or by going to cryptojeb.com. That's going to be it for today, guys. Make sure to stay tuned for 2 p.m. when that news releases, and keep a weather eye on your charts. I will be keeping you guys updated and posted as that information drops. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.